Good morning, everyone. It is 7 minutes past 6 in the morning in Kiev. Let's begin the analysis. We'll try to take a quick look at Bitcoin and maybe even Ethereum. Well, let's see what we have on the monthly candles. We have a strong oversold condition here, but no clear signs of growth. Moreover, the February candle with a low of 60,000 and the heavily sold March candle both suggest that Bitcoin will drop to the 50-month average, right here around 58,740 weekly candles. Notice that we've had a break in the overbought, oversold indicator. It's now pointing downwards. Yes, we haven't seen a formal bearish engulfing, so there's still a chance for growth, and technically this is even a very good entry point for a long, but definitely with a stop. Nevertheless, based on the indicator and candle structure, it's still quite risky to buy, but we need to look at the lower time frames. But right here and now, the weekly candles are looking down. Down to where? To the area of the 200-week average, that orange one there, $59,500. Daily candles. Notice how it kept hitting the 50-day line, failed to break it, and went down. Similarly, yesterday's drop didn't form an engulfing pattern on the candle. And it might turn out that we're being given a very good entry point for a long with a target of $69,000 plus. There it is in Tiffany blue. Potentially it could go higher, maybe to the 100-day around 77,000, or the 50-week, let's move over here, or the 100-week around 87,000 plus. But for now it's just an assumption and expectation, mostly expectation because, well, there are no real assumptions yet. Everything here is looking down, specifically the overbought, oversold indicator, specifically all the candles are red and so on. Right. But technically, we haven't fully completed a bearish reversal. We don't have a bearish engulfing on the weekly candles, nor do we have it on the daily candles. Right? Let's look at the 12-hour ones. This indicator is also pointing down here. There's also an unrealized growth target here that contradicts the decline in the range of $70,300 to $71,400. Right? But there's already a green candle here, which suggests that in theory one could even try a long with a stop below this candle. The stop ends up being quite large, $65,700, but it's worth a try. So the 4-hour candles, we can't say they're oversold, but we can say that we've got a potential reversal candle. It updated the local minimum and closed with a decent green body. Let's take a look and see that we had an engulfing of this red downward candle, which means somewhere near the base of this green candle. And look, we were already approaching that base, or from its midpoint, but we passed the midpoint and reached the base. I'm talking about the green candle. Well, potentially, technically, one could consider a long entry point, right? But definitely with a stop below the candle. Yes, the stop turns out to be quite large, but our targets are also quite ambitious. That's $77,000 and $87,000 plus. So in theory, such a point of view is valid. But if we look at the hourly candles now, we see that we have a clear downward trend. And while we're here in this area, right, on the retest of, let's say, the base of the 4-hour candle right here at 66,200, maybe we'll still reach it. Without a bullish engulfing on the hourly candles now, we have no right to talk about buying. So we need to carry out the following. We must carefully wait for a specific bullish engulfing on the hourly chart, making sure that this engulfing happens without a bearish engulfing of this green candle. I mean, if we engulf the green candle, then whatever happens on the hourly chart won't matter one bit. There. But if we see here that, say, we've engulfed this red candle or that red one, well, it's enough to have the candle that by engulfing, we generally mean what updated? Well, engulfing the candle that updated either a local minimum or a local maximum, right? Accordingly, even engulfing this red candle from the previous hour, right, in the current hour in the remaining 47 minutes would basically be enough to talk about a technical reversal and the possibility of a long entry with a stop where, with a stop below this red candle, then it will be extremely tight for you. The ideal stop, of course, would be below the 4-hour green candle, but that one will be more expensive. If you're ready for it, then go ahead. On the hourly chart, note that we also have growth targets, right? Up to the level of $68,285. Well, overall, the situation allows for growth. We have weekly candles oversold to some extent. Monthly ones are heavily oversold daily, and 12-hour ones are clearly not overbought, and 4-hour ones are quite oversold. So we have room for an upward move, but so far it hasn't technically materialized as green candles that would engulf the red falling candles. That is a bullish, engulfing. That's it. On the 15-minute chart, we're trading below all the moving averages. This also doesn't favor growth yet, but notice that the prerequisites are already there. Maybe even right now, you could try taking a long with a stop under 66,200. And on the 5-minute chart, we have a long situation with many growth targets that we're working through right now. I'm ending the video so you can see it sooner.